Hello, everyone. Here's a brief update on the American Family Plan, really the Biden tax proposal, focusing solely on how it may impact private U.S. business owners with respect to capital gains. The primary change with respect to the Biden plan is that if you have income over $1 million in the year in which you sell your company, the federal capital gains tax will shift from 20% currently to 39.6%. In addition, the IRS already applies a 3.8% tax on capital gains for high-income earners, increasing the Biden tax proposal to 43.4% from what would have been 23.8% for people with income over $1 million. Now, for the avoidance of doubt, income is not just earned income, but all income. So if your earned income in a year is $400,000 and you have gains of over $600,000, you trigger the higher rate. Here's an example that, for simplicity, does not even include the 3.8% IRS charge or individual state capital gains taxes. Just on a federal basis, a company, let's assume a company has EBITDA, earnings before interest, tax, depreciation, and amortization of $2 million. You agree to a deal of 6 times EBITDA, which is $12 million, get basis in the company of $3 million, so your capital gain is $9 million. That's $12 million minus $3 million. Under the current method, your proceeds after tax would be $7.2 million. If the new tax takes effect, however, you will only receive $5.436 million, which is a decrease of 25% in your net proceeds after tax. In other words, you would pay an additional $1,764,000 just to the federal government. And if you're in a high tax state like California, there would be an additional state capital gains tax of 13.3% under the older new regime. This tax, if approved in its current form, will have a dramatic impact. Obviously, it will. You should consider the implications for your personal circumstances and finances. We're not tax advisors and do not provide tax advice. So I strongly recommend that you consult your legal and tax advisors on your tax issues. On the commercial and M&A issues, I would offer you a conversation with me or one of my colleagues on what this means for you, what it might mean for your timing and for other issues relating to your company. Passively waiting does not feel like a great approach. As we continue to say, it makes sense to prepare and have your ducks lined up so you can move when market windows open. And as of today, they really are wide open. We continue to be in a great M&A environment for sellers. It's a good time to explore options. It'd be good to be in touch. Thank you.